Hello, everyone. Welcome back to this very special segment. I remember about 3.5 years ago, I was at a tech event, and one of the panel judges or presenter really struck me as very smart, very intelligent, very calm, very cool, have this aura about him. It's like, okay. And basically just feel like, it's tech, it's tech, right? And later on, I know this gentleman, his name is Oliver Rippel, right? And one of the amazing thing is he represented the company back then. It's called Naspers. Okay, and the first thing that came to my mind is Naspers sound very familiar, right? And it just occurred to me, Naspers is one of the largest shareholders of Tencent. I was like, oh my goodness. Okay, so finally I met somebody who actually worked as a senior executive. In fact, one of the key CEO. Okay, for the business unit, one of the business unit for Naspers, and none other than my good friend, okay, and someone I look up to in the space of tech investing, especially in the private market. Okay, it's Oliver himself. So can you all welcome, okay, Oliver? Thank you. So Oliver, so maybe you want to do a quick introduction, although we know that the audience already know some of your profile. Okay, what do you focus on the last 20 years itself, and what make you in a very unique position to actually share more about insight of actually tech investing, especially in the Southeast Asian market? Yeah.
No, thank you, Ken, and thanks for being here and being part of this V Summit. It's a real honor. I know that you guys have put a lot of effort into it, and this has really come to light now in a massive scale. Given technology at the end of the day. So I'm glad to be here. So to give a short background to myself. So as you can probably tell from my accent, I'm originally from Germany, but I'm actually of half German, half Asian descent. My mother is from Korea, and she went to Germany, many decades ago. But yeah, my story is summed up, very briefly in I worked my whole life in tech. And mainly across now 3 firms, 2 before I co-founded Asia Partners with a terrific team here based in Singapore. So I spent about a decade at eBay, the large e-commerce marketplace across Germany, where I'm from, obviously. And then in 2004, I left Germany for good to move to Asia. And I joined eBay China's team, spent 2 years there, then moved to Korea, spent a year there, then moved to Southeast Asia in 2007, and was responsible for market expansion of eBay into Southeast Asia.
Wow.
And one of the companies that I actually partnered with was a company in Thailand called Sanook. And Sanook was actually owned by Naspers. So I realized that there was sort of like a Thai management layer, and then behind that Thai management layer, there was like a South African ownership layer.
Okay.
And I thought like, okay, what are these guys about? And that's how I got to know Naspers. And Naspers, I joined them about a decade ago, or actually now 12 years ago. And Naspers, as you may know, is a large investor and operator of tech businesses around the world, especially in emerging markets, and obviously is known especially for its large exposure at Tencent. Naspers today, owns 32% of Tencent, so quite a big chunk.
How much do they invest in Tencent early days? It's what, $30 million?
Something like that. It wasn't a lot. It wasn't a lot, especially if you think about valuations and investment dollars today.
Yes.
And that was a long time ago. It was actually in 2001.
Wow.
That Naspers invested back then in Tencent. And then more than having the foresight to invest in one of the juggernauts of Chinese tech today, it was the foresight to actually hold on to that investment.
Wow.
And to see it all the way through a successful IPO. And then international expansion, WeChat, you name it, right? The rest is history. And Tencent was one of the earlier investments that Naspers did. And when I came on board, which was 2009, that's when we started to aggressively invest into e-commerce. And e-commerce, with my background and background of many of my colleagues, became basically our prime investment target. And that included e-tail, marketplace, online travel, you name it.
Yep.
And for Naspers, I was responsible for various regions
Yep.
around the globe. I was responsible for Africa and Middle East for a while, then India and Southeast Asia. Latin America was also added at some point. And then for the last 4 or 5 years of my time at Naspers, I was the global CEO of a segment that we called B2C e-commerce, which included all the e-tail, B2C marketplaces and online travel investments that we made or businesses that we ran ourselves.
Yep.
And the one business that you may have heard of was a business called Flipkart.
Yep, very well known in India.
Very well known. It's basically the leading B2C marketplace there.
Yep.
And Flipkart was a nice end-to-end story for me as a private equity investor, given that I was responsible for every single check that we wrote to the business, and then also sitting on the board and navigating from our perspective, through our exit. And we made a nice 1.6 billion of gain out of that transaction.
How much?
1.6 billion.
Wow.
Yeah.
Okay. So you guys, you're talking to the real deal here. Huh? These guys are actually day-to-day professional, looking at actually private companies when they're very small or they're growing. Okay, able to have the right foresight and experience, able to have the stomach to take the risk, pull in the hard cash in, right along the growth of the company, and eventually make a good return. Okay, so thank you. Wow, I think that really earned the right. Okay, and really want me to actually ask more questions about this, right? So now, and what can we learn in the Southeast Asia from studying other tech ecosystem in China?
Right. So to just finalize the story from our perspective. So I retired from Naspers end of 2018.
Correct.
And then with a terrific group of co-founders, including Nick Nash, who previously was with C Group and actually led the IPO of C at the New York Stock Exchange.
Yeah.
And another terrific group of other co-founders, from Southeast Asia. We started Asia Partners beginning of 2019 to look specifically for opportunities in Southeast Asia. And what's interesting about Southeast Asia, and that's why it makes sense to talk about China in that sense as well. If you look at emerging market tech investing, there's a concept called time machine investing.
Time machine investing.
And what that means is that actually tech evolves quite similarly across the globe, just at different points in time. And a good sort of like proxy to see when will a tech ecosystem pop in the market is actually to look at affluence. And you can take a proxy like GDP per capita to look at affluence across different markets. And when markets hit a certain sort of like period of affluence, some magic is happening from a tech perspective. And given that China is exactly 10 years ahead of Southeast Asia in terms of affluence, you can actually, almost like a movie trailer, look at what happened in China 10 to 15 years ago and draw certain lessons for Southeast Asia.
Wow. Could you give us maybe a more concrete example on this? Like take example, let's say Vietnam. So is Vietnam development right now is like maybe 15, 20 years ago China?
Yeah, so Vietnam is probably still, from an affluence perspective, a bit earlier stage. The bellwether for us in Southeast Asia is Indonesia. Indonesia is about a decade behind China from an affluence perspective. So you can look at what models in terms of tech business models are big now in Indonesia, and in many cases they started to become big about 10, 15 years ago in China. Good example is e-commerce. Another good example is online education, and many, many others. And from that perspective, we can actually deduct what are the models that have worked out well in China that already led to public companies, large traded, successful IPOs, and stock that you guys trade every day. And what are still the white spaces in a market like Indonesia or more holistically Southeast Asia? And from that perspective, us as investors collectively can think, there should be a big company here, but there isn't yet. But if sort of like China is a good basically blueprint, over the next few years, we should actually see a listed company in that particular sector in Southeast Asia as well, given the precedent that we've seen in China and other markets. And
is that one of the key reasons why you and your co-founder Nick Nash, saw the opportunity? There's a niche in looking at actually this Southeast Asia tech company. That's why I formed a company to actually help investors to actually capitalize on this opportunity and ride on this growth. because of this time machine kind of concept.
That's right. That's right. We believe that there should be over 20 unicorns or more, tech unicorns that are listed on reputable, respectable public exchanges coming out of Southeast Asia over the next few years.
Wow.
And we want to be part of that investor ecosystem that helps those entrepreneurs and helps those companies to go all the way from one market to 6 markets, from 1 business model to 3 business model, from hundreds of people to thousands of people, and help them to ultimately ring that bell, because that's what it's all about for entrepreneurs. They want to go to the New York Stock Exchange. They want to ring that bell, same way as Forrest and Nick has done, with the C.
Yes, and C has been doing very, very well. In fact, after they got listed. Yeah,
that's right.
So now, what is the key factor that allowed these Southeast Asia companies to able to win over like US first mover company like Uber versus Grab, Alibaba versus Shopee, GrabFood versus Foodpanda?
Right. So actually, if you look at, and this is an interesting exercise, you can do that at home. You can look at every tech company in the world, and you can put those companies in one of 3 buckets.
Yeah.
So bucket number 1 is what we call global network effects businesses. So, and it should be no surprise to you or anyone listening in that the Google of Thailand is Google, and the Facebook of Indonesia is Facebook, right?
Yeah.
And the WhatsApp of Singapore is WhatsApp, right? Yeah. So these are businesses that are mainly coming from Silicon Valley, and that have strong what we call global network effects.
Okay.
And we stay away from those companies in Southeast Asia as much as possible, because that would be really a tough, David versus Goliath race to try to compete against those guys, right? Then there's a category number 2, gladly not that much of a factor here. That's like when the regulator unlevels the playing field and makes it difficult for international companies to compete, right? And arguably, you could say the Baidu of or the Google of China should have been Google, or now it's Baidu, right?
Baidu,
so
yeah.
Anyway, so I leave that up to you guys for interpretation. But the good news is for us in Southeast Asia, that's by and large not a factor. Markets are relatively open.
Okay.
Which leads us with category 3, or the bucket 3. And these are what we call local network effects businesses.
Local network effect businesses.
Yeah. And these are businesses that have some form of local installations because they plug into local supply chains, local logistics. They need to rely on local merchants, local payments, local hotels, you name it. And for those businesses, looking at all the data and analyzing actually a number of those for Southeast Asia and for other markets, it's usually the local guy that wins versus the global guy. Why? Because the local guy is usually much more effective in terms of localizing it to the local taste and making sure that there's a true product market fit for the offering, relative to what the global guy is doing. And I mean, you mentioned a lot of examples, right? But just to name some of the obvious, right?
Yep.
Uber was kind of like a first mover advantage here in Southeast Asia, if you recall. But Uber didn't really figure out how to do 2-wheelers like Gojek did in Jakarta, right?
Yep.
Although that's the main mode of transport there, the main mode of ride sharing. Uber for a long time also didn't really like cash payments. Because in markets like the US and Germany and Australia, it's all credit card, right? So it's not like that they don't have these insights, but often these insights from a product roadmap perspective compete with all the other projects that the other country managers are demanding. And often an emerging market gets left out or it's sort of like deprioritized. And that gives local companies an opportunity to really jump in there and get to sort of like a market leadership position, even though they're sometimes late starters to the race versus the global guys.
So eventually Uber had to actually do a compromise with Grab and actually exit the Southeast Asian market, but take a stake in Grab, and vice versa, Grab also take a stake in Uber.
That's right. That's right. And we see it more and more. Like a good example are also the Chinese strategics. Often they started first to enter the market organically. You may all recall like the big push that Taobao had in Singapore and AliExpress and all of that, right? But often that actually was much more difficult for them to do than to at the end of the day just buy Lazada, right? in the case of Alibaba, right? So many strategics have actually change their strategy to invest more into later stage private equity companies, or to outright buy those companies. And then those companies like Lazada become like the Southeast Asia footprint for a like global giant like Alibaba.
Okay, so now turn the coin around, right? So let's focus on actually how would this Southeast Asia local player then able to grow across border and able to grow overseas?
Right. It's a very good question, because ultimately, I mean, let's not fool ourselves. It's not easy to do.
Yeah.
And if you think about Southeast Asia and you compare it to China, India, the US, it's not one market. Right, it's not like one country, one language, one currency, one culture. Right,
I know that pain. I know that pain because we have been growing to different market. Wow, you're right. You're totally right.
That's right. So there is a what we call like a great filter. Companies that don't manage to go beyond their home market.
Precisely.
And that's a fact of life here in Southeast Asia. The good news is, once you look at companies that are already effectively in 2-3 markets in Southeast Asia, they've figured something out. And often the playbook looks like this. You have a Singapore headquarter. You have a development center in Singapore or Vietnam.
Yes.
Right. And maybe even China or India. And then you sort of like hire a bunch of country launchers that go, systematically into the other big population-rich countries. Indonesia, Philippines, Thailand, Vietnam, etc. Plant the flag. And over time, you build local teams. And it's what we call the inverse pyramid. Again, the difference to like a global network effects business is most of their people are actually sitting in 1 or 2 air-conditioned buildings in Singapore, right, for the region, right? And that's if you look at a Facebook, if you look at a Google, etc., right?
Correct.
But for these local network effects or regional network effects companies, most of the people are actually in the field. Yeah, they are in the country, in sort of like on delivering products, being in the warehouse, doing customer service, etc. So that's again like something that the global companies don't really like to do, right? So it gives the local companies an edge there.
This answer really a bit freaked me out, because you just describing our growth path right now.
Right.
Exactly the way you actually say it. Wow. Okay, serious. So now, in that case, would their growth be stopped if it couldn't grow beyond further than Southeast Asia then?
Well, I mean, the good answer to that is no. So I mean, the Southeast Asia, I mean, if you just look at the numbers, it's 9% of humanity. I think 10 or 11% of the young people that are on the planet. It's a big region, right? With a very large and growing middle class, right? So, I mean, for me, the killer argument is always like, look at C. Like C is now, I don't know what the latest market cap is, but north of $100 billion.
Yeah, correct.
With basically a Southeast Asia strategy, right? So these markets here are large enough to produce large winners. If you look at Shopee's GMV, which they disclose, right? That's like very large, approaching 10 billion on a quarterly basis, right? So from that perspective, you have ready markets now, and even and now during the pandemic, and with all the human tragedy that we've had, actually for tech, it led often to an acceleration of adoption curves, right? And all of a sudden, I mean, we all know the stories living in the region that, we have senior citizens, using Redmart or using Prime Now, right? And just think about a year ago.
They will not touch it.
They will not touch it in 10 years, right? So from that perspective, it's a very interesting point for tech in the region. Big enough markets. Now we have actually a network of great entrepreneurs. Many more investors that are venture investors and growth equity investors like ourselves funding those companies. And adoption curves on the consumer side that are actually rising. It's a good time to be in tech.
Interesting. Your company itself fund the growth stage of the private tech company, and your ticket size usually is about, we are talking about like what, 20-30 million and above, right?
That's right. Yeah. So the way to that, just for your interest, the way to divide up the private equity ecosystem in Southeast Asia, and to be frank, anywhere in the world, right? That's the usual terminology that you will face. Is you have what we call like seed stage investors. They come in with maybe a $10,000 or $500,000 check, and it's basically just an idea. and a good entrepreneur. And often these are family offices, these are individuals, high net worth individuals, etc., that are funding those businesses. It's usually not the best strategy for kind of like smaller retail investors, because to be honest, the execution risk is very high for those companies in order not to make it, right?
So they have to invest a lot of them, right?
They would have to invest in a lot of them. And you have sort of like certain so-called like seed funds or angel funds, etc., that do a lot of those investments systematically, right? Across the region or the world. Then you have the venture capital ecosystem, and these are sort of like checks between 1 million and all the way up to $20 million. And this is sort of like what you always hear, the Sequoias of this world. And in Southeast Asia, you have a lot of sort of like regionally grown firms like Jungle Ventures, Golden Gate Ventures, Open Space Ventures, Monks Hill, etc.
Correct.
So they are basically funding often what is called Series A and Series B companies. So when a company is trying to establish or has established product market fit, mainly in its first market, around the first sort of like customer cohorts, right? And then you move sort of like one step further, and then you get into the growth equity stage, which normally is between, let's say, $20 to $100 million. And this is usually when company is scaling rapidly, right? Going into new markets, going into new business models. And usually you have already monetization established. There's a much more stable financial profile. You know where you're going at the end of the day, right? And then you go to the late stage or pre-IPO stage, which is like where the big boys and girls play, right? This is the world that Nick and I come from, right? That's like the General Atlantics and Naspers of this world, or Temasek or TPG or KKR, you name it. It's actually quite an established ecosystem in Southeast Asia as well. So once a company seasons and matures to that check size range, there's usually a lot of demand, right? Because then it becomes a much more foreseeable story also towards an IPO.
So that's but for the growth stage investor side itself, there's not a lot of company actually willing to write that ticket from 20 to 50 million kind of ticket size before they reach to that pre-IPO stage, right?
Right, and it's logical, right? And it's actually exactly how China evolved 10 to 15 years ago. It's first an early stage, venture ecosystem, gets formed, and that sort of like makes sure that all the entrepreneurs that have great ideas that want to start companies get funding, right? Once those entrepreneurs and companies get bigger, then you have a need for more growth equity. So usually there's a lag between like the venture ecosystem forming and the sort of like growth equity ecosystem forming. And then once you get to the late stage, that is usually already there. Because these are the guys that also fund, real estate, infrastructure, energy projects, etc. And these are usually global firms as well, right?
Guys, are you listening to this, right? I'm not too sure about you, but I'm actually learning a lot here, okay? So now, let's talk about actually those companies before they reach to the GIC or pre-IPO stage, right? What are some things you notice about the challenges that this company faces, right? Is it from the big boys? Is it the talent? Is it government? Is it culture? No, what is the main challenges that you see commonly they face?
So, I mean, talent is basically the most important challenge and opportunity that a company can face in its lifetime, right? And usually what you have is let's divide it up into tech-related talent and non-tech-related talent, right? On the non-tech-related talent, assuming the founder is tech or non-tech doesn't really matter. But once you go bigger, you need to build up the right, kind of like hierarchy, the right org structure, so that you as a founder don't have to do things all on your own, right? So you don't want to get into a situation where you are the limitation to the growth of the company. Right?
It becomes a bottleneck, right?
That's right. And I'm talking about functional talent. I'm talking about country-specific talent, usually across like a quite distributed workforce across the various markets in Southeast Asia, right? So that's a leadership challenge that companies have to overcome. And then you have the tech-related talent, and that's to be very honest and fair, that's still a big challenge in Southeast Asia relative to what we're seeing in China or India. Not enough engineers. By and large, right? So, and the engineers are pretty much clustered around markets like Vietnam, Singapore, etc. But entrepreneurs being entrepreneurs, they get very creative around that. So what we have seen is many tech companies in Southeast Asia build out engineering hubs in India. They build out engineering hubs in China. They're trying to overcome that talent shortage by going further out, venturing further out of the Southeast Asia equation. And also over time, that gap will get filled. It's just sort of like still a bit of just a timing mismatch there. So talent is a big category of challenges that a company has to, or a founder has to address successfully. The second challenge that a founder has to address is sort of like the scalability challenge, right? Again, it's somewhat related to talent. How can I effectively go from, as I said before, 1 market to 3 markets to ultimately 6 markets? How do I build out those structures? How do I get the right service providers, advisors on board for the various markets? How do I structure that across the various markets from a legal structure perspective? And then maybe, look, there are many more to talk about, but just to name one more cluster, right, of challenges that a founder has to deal with is also like, how do I strengthen the internal structures of the company with regards to governance, with regards to the right checks and balances, the right control structures, the right board governance structures, because ultimately you have to think about those companies. They have to, at the end of the day, become public companies, right, over the foreseeable future. And it's usually too late to start thinking about that when you are about to go IPO, right? And actually, if you want to sleep well at night, you want to have that in place as soon as possible, right? And that's something that us as investors, other sort of like experienced investors, are also helping companies think through.
So in fact, what Oliver just mentioned, right? I think it's not only for those growth tech company. I think it's for a lot of actually companies that are listed. They also face the same issue, that where they grow to a stage where they find that the main market is saturated. They need to move beyond their actually main market. And the moment they move beyond, they step out of their so-called circle of competence. Okay, that's where they face a lot of uncertainty, and there will be project of actually certain risk level they never knew that existed. Okay, and maybe they couldn't form a team that is actually capable enough to actually bring them, okay, and actually grow in that new area itself. So that's also always that's a risk. So audience that is actually reading this, right? This not only apply to actually private companies. This also apply to the company that listed that we look at. Okay, because just think about it, right? Either the day the company stop growing, the day the company die.
That's right.
Yeah. So what Oliver mentioned is really relevant to actually listed company too.
It's a risk and an opportunity, right? Because it also led an Amazon to AWS, right? And it led Google to many other interesting business options, right? And Facebook is also a master in that, like with mostly acquisitive, but what they've done with Instagram, WhatsApp, and so forth. But yeah, you have to. There's a certain degree of failure. Because of, as you said, you're venturing out of your proven path to a certain extent.
Precisely. And interestingly, recently there's a lot of talks about unicorns or future unicorns. Especially last year, we see the US market, right? Wow, all the US tech company IPO come out first day is popped by 100%, 50%. And this company is like, the moment they list the company, they become a $1 billion market cap or multi-billion dollar market cap. What's your take on this? On the unicorn and future unicorn?
So firstly, I don't actually like the term unicorn. I like it when I play with my daughter, right? Then there's unicorns, but I mean, unicorns are not real as far as I know. My daughter may disagree. But yeah, it's also I think it personified like a trend that we saw in the tech world coming a lot out of Silicon Valley. Which was sometimes wrongly described as sort of like blitzscaling and others. And what I'm talking about is sort of like really just throwing bucket loads of cash at challenges and trying to sort of like
brute
force an outcome, right? In terms of market share and sort of like ultimately market ownership, right?
Like we will, right?
Yeah. Well, there are many examples. I'm way too polite to mention many of them. But yeah. So what we actually, and again, this is more tongue in cheek than anything else. We coined the term in our firm of a rhino.
Oh, cool.
Rhinoceros as opposed to unicorn, because number one, rhinos are real.
Okay.
Right, as far as I know.
Oh, I like that.
And rhinos are sort of like more resemble the entrepreneurs in Southeast Asia. They're closer to the ground. They are scrappy. They are thick-skinned. They survive on very little. And ultimately, we think, and this is maybe where it stops with the analogy to the real world, but we think our rhinos can actually go public on the strength of a PE multiple.
Wow.
As opposed to sort of like a revenue multiple, right? Yeah.
Okay. And in fact, in our V app, we have a animal classification is rhino. And earlier on, I think yesterday when I discussed one case study, that company actually is a rhino itself. Okay.
Rhino, and other people have coined the term camel, which also I think is nice because you sort of like can run very fast, but then also if there's sort of like times where you have to be slower and sustain on very little, they can do that as well.
Cool.
So they are much more apt description of describing the great companies other than sort of like a fairy tale creature.
Okay, you will hear it, right? Okay, type in rhino. Okay, type in rhino. Okay, now, and what do you think of actually the talk of IPO? Because there's rumors that, like, example, I say Grab, thinking of IPO this year. So what do you think of like company like Grab and Carousel? Like Singapore-based company, right?
Look, and I'm not gonna go and give specific sort of like views on companies that are not part of our portfolio, right? But by and large, one could remark that actually we haven't seen that many IPOs yet in Southeast Asia, other than C.
Yeah. How about Razer?
Okay, Razer's another one, right? But like looking at that first cohort of large tech companies in the region, not many of them have actually listed, right? And I'm thinking about the Grabs, the Gojeks, the Travelocas of this world, and others, right? And actually, that's a bit sad from our perspective, because if you actually look at all the data, once a company has reached at least, I mean, can be obviously much higher, but at least about 25 million of annualized gross profit, it actually can list on a public market exchange, a respectable public market exchange, based on all the data that we have seen, right? And obviously it needs to have a lot more things than that. It needs to have the right growth profile, the right team, the right governance structures, as we discussed, right?
Did you mention it's 25% of gross?
25 million.
25 million.
Yeah, of gross profit.
Of gross profit.
Yeah. And that usually is quite achievable for many tech companies, because many tech companies have very high gross margin, right? It could be 70, 80%, in especially software companies, right? From that perspective, there could actually be many more companies that are listed, in the region. And once you are listed, it gives you a lot of advantage. I mean, of course, you have to also disclose much more of your metrics, and there's much more sort of like also compliance and regulatory requirement, right? And that sort of like many entrepreneurs get a bit scared because of like also competitive dynamics and all of that, right? In terms of sharing the data. But you also then all of a sudden have access to much other sources of capital, right? As a public company,
precisely.
Right? Equity raising, debt, etc. Right? And
C is a very good example.
C is a fantastic example, right? They raised billions of dollars there. And from that perspective, actually, it could lead to a competitive advantage for the companies that go public early, and capture some of that sort of like access to the capital markets.
We just, I mean, from the investment circuit itself, we just hope that the example of C going IPO and did so well will inject a dose of confidence to those tech companies in Southeast Asia to take it as a role model, to say, look, well, IPO listing it might not be bad after all, right?
Yeah. We actually said, we made a prediction last year where we said we think that there should be an opportunity to generate about $400 billion, $500 billion of tech market cap coming out of Southeast Asia. We had no idea that one company already provides 20% or 25% of that, right? But that gives you actually also a sense of potential, right? To the market. If just one company is able to do that, right? Precisely. What can the whole cohort of 20, 30 companies do collectively, right?
Totally agree with you. Totally agree with you. And my last question, right? I think a lot of our actually viewer and actually audience here want to find out is, what is your investment outlook for the year 2021? I mean, from a personal perspective, what do you think is the investment outlook for 2021?
So, and as I mentioned earlier, it's actually a good time to be in tech, right? From that perspective, we've seen like adoption curves accelerate to an extent that you could argue 4 or 5 years or even more has happened within 1 year. And I'm not talking about the obvious e-commerce transaction and buying sort of like groceries online, but I'm also talking about sectors like health tech. Telehealth has really come through in a large way in the region in the past year. And telehealth also then could give you access to all kinds of other medical services, whether it's sort of like pharmaceutical procurement, getting sort of like your medicine delivered to your doorstep, the whole sort of like specialist or tertiary care referrals, chronic disease management, also maybe in conjunction with devices, right? So a very, very interesting sector that we're also keeping a close eye on. Online education has really gone through great length in the past year. And we see this, one of our portfolio companies, they do Snapmask, they do mobile one-to-one tutoring.
Snapmask, right?
Snapmask, right?
Snapmask.
Via the mobile phone.
Wait. I think just doing some background context. Snapmask is actually founded in Hong Kong, right?
That's right.
And the founder is actually used to be a tuition teacher?
Yes, right. That's right.
Using tech to actually help students able to answer the question even in the middle of the night.
That's
because
right.
As a student, if I want to study for my exam, right, my tuition teacher cannot be with me 24 hours, right? So he created a platform to ask a question, and the platform will actually direct this question to any so-called database of actually tutor and able to answer the question, to help to solve the problem, right?
Yeah. That's right. And I mean, we all know how important, especially senior high school exams are, right? To predict like which college do you go to, determines livelihood and all the other goodnesses of life, right? So from that perspective, to have a fully end-to-end tech solution where students don't have to go into cram school and be exposed to maybe no social distancing and one-to-many situations where you still don't get it, right? Because you still don't get it. You're right. You're still not sort of like really, really encouraged to ask individual questions. Then to go after 8 p.m. A long day onto this app and say like, hey, please just help me understand that particular problem, whether it's math, physics, chemistry, Chinese literature. They do anything, right? So it's a great, but this is just one example of like how online education has really changed things with more to come. Another good example that we have looked at is like, even to the extent that you have, cars. They're being now more and more transacted online. And actually car ownership has also seen an increase because of the pandemic. Not many people trust public transport anymore.
Very interesting.
As well as ride sharing, right? So, and car ownership in the region is actually still relatively low. And that is usually, again, like correlated to affluence and it should go up over time. But it seems like we've seen a bit of an acceleration here. So there are platforms like, for example, Carsome, company we backed that basically gets involved and provides like an end-to-end solution for used car owners to sell their car, but also for used car buyers to buy via the platform in markets like Malaysia. So that's an interesting trend that we are also observing. And last but not least, I guess I wouldn't rule out even industries that had a bit of a mixed bag, right? In 2019. If you look, and I'm sure all of you followed the Airbnb IPO. That's a great example of a company that really bounced back.
Once the vaccination is widespread.
Right, and even before, right? What they just did is they shifted to more like domestic use cases or local use cases, right? As opposed to now traveling to Bali to stay in a villa, like I mean, like in America and Europe and elsewhere, when you're on Airbnb, you look for the local experience, right? That is maybe away from the masses and a bit more sort of like safe from that perspective. And very similar, we've seen, for example, another portfolio company of ours, Red Doors, which offers sort of like budget hospitality.
I saw along in Singapore they have
That's right. They have a few here as well.
Oh, so that is a company that your company invested, right?
That's another company that we invested in. So they also. Again, like the use case here is mainly a domestic use case in markets like Indonesia for often like what we call essential business travel. So travel that can't be done by Zoom. So like think about the proverbial traveling salesman or the Ericsson, engineer that has to maintain cell phone towers, right?
Yes, correct.
He has to go into the field.
Good point. Very
and
good
to
point.
have sort of like a safe experience, even at the low price point, is worth a lot, right? So and these are just a couple of examples, and forgive me for using the examples that I'm closest to, which are sort of like from our portfolio. But overall, we have earmarked around 20 subsectors of tech that we are observing very closely. Again, the main way to do this, if you want to try this at home, is look at all the companies that IPO'd in China and see like, hey, do we have actually a company already in Southeast Asia that does something similar? Are they already listed? Are they not listed? Etc. And track those companies, because more than anything, you will see a local winner emerge for those companies as well in Southeast Asia.
Guys, this is actually the golden nuggets. Oliver just shared with you actually the hint, right? You want to know what's coming, right? Okay, just look at what company listed in China. Okay, eventually when the affluence market come back, right, in Southeast Asia, these are some of the company potentially will follow that trend itself. So I think, okay, very grateful. We wrap up from here. Thank you, Oliver, for coming to share his wisdom insight. Take note, his company name is called Asia Partners. Okay, I'm very sure, okay, very soon you will hear this name in Southeast Asia that is just like Sequoia, right? Able to support growth company, tech company, eventually emerge to be what they call Rhino, right? Not
Rhino.
Unicorn, Rhino.
Not unicorns.
Not
Rhino.
Unicorn, Rhino.
Yeah.
Thank you, ladies and gentlemen.
Thank you. Thanks for having me.
Thank you so much. Thank you,
Thank
Oliver.
you. Thanks, guys.